Good morning from our global headquarters in New York. I'm Menace Granny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
So much anticipation for a mic drop moment. Nvidia underwhelms and dips pre-market. Conflict ratchets higher. Oil and gold rally after Ukraine report on Russia firing a ballistic missile. The Treasury search continues. President-elect Trump holds meetings with contenders while mulling a new role for crypto. Good morning, Menace.
Danny, a very good morning. You're right. We're expecting so much of a drop of the mic moment, to quote Wedbush Securities. But I just want to emphasize that Nvidia did deliver a 94% rise in revenue. Context is everything. The stock's down 3.33%, so we're moving a little bit lower as New York begins to waken up. I think there's two offers across the equity space this morning. One is the Nvidia non-drop the mic moment, and also the ratcheting higher, the geopolitical, the launching of missiles from Russia into Ukraine. What does that mean? What is that escalation risk? Roll it over, have a look at the bonds. We checked their side a little bit earlier. There was no real movement, but suddenly now we are a little bit more momentum, yields dropping. There was an unloved 20-year bond auction yesterday, bid to cover ratio 2.34, a little bit less than the average of 2.52. Roll it over and have a look at Bitcoin. My gosh, the things I regret in my life. The things I regret in my life, not buying Bitcoin. We're on our way to 100. We're on the way to the moon. $100,000 is on the way, Danny. We've got this story, of course, that we may have a new crypto czar seated somewhere on Capitol Hill.
Well, maybe for those that live in regret of not buying Bitcoin, maybe today is the day where you can buy Nvidia. Maybe it's the day it's on offer. I go back to their last earnings. They fell more than they're currently down. They fell some 6% and then went on to rally 20% to this point. So yes, expectations were lofty, as are valuations. Investors want something that's miraculous, but as you point out, these numbers are still staggering, even if they were just at expectations.
They are, and as I said, it's this plus or minus 2% on the number of 37.5 billion. Barclays make it very clear. Today's price reaction does not correlate typically, and we need to emphasize the caveats, typically with where Nvidia goes post these earnings. We're going to have, frankly, a little bit later on from HSBC. He shaved the price target to $195. He just said there just wasn't the normal full bull alpha in the guidance.
Yeah, I'm still like, okay, we're upset over 73% margins instead of 75 when Intel doesn't even have half of that.
No.
Well, let's take a check on those Nvidia shares. Manage to show them in a moment. They're bottom of your screen, down 3.2% this morning. So yes, it gave a forecast that was missing the most optimistic of expectations. Joining us now is Bloomberg's Tom McKenzie. Tom, what went wrong and what went right?
Well, I like the Danny Menace comparison, which is that we always build up to your show with expectation that you both, as a couple, as a duo, will both inform and entertain. And you never miss those expectations.
So
Nvidia, though, has missed. They have not gone full bore on these results. But let's take a step back, because as you were pointing to, in the quarter in which they reported, $35 billion in terms of the revenues, above estimates. The current quarter that they guide to, the current quarter, $37 billion. Again, above the average analyst estimates, but to your point, below the most bullish target that had been put out there by some analysts of $41 billion. The demand for the Blackwell, the new chip, is still there. It's expected to ramp up into next year. The question really is whether they can supply that demand. If you're looking for little flies in the ointment when it comes to Nvidia, is it around the engineering challenge and the squeeze that's put on the margin? With the context that you give on the expectation that you maybe go from a gross margin of 75% to shock horror 73%. As you said, more than double Intel's gross margin and 20 basis points more than AMD. Morgan Stanley saying this was a transitional quarter. The first full quarter for the Blackwell will be in January. That will be a crucial quarter then. They expect the ramp up for Blackwell to be there. The question will be whether Nvidia can meet the demand.
And to quote the man himself, I think it's going to be scale deployments in terms of that rampant demand. Let's just check out what the CEO, Jensen Huang, had to say about the Blackwell production. This was the earnings call, Tom.
Blackwell production is in full steam. In fact, as Colette mentioned earlier, we will deliver this quarter more Blackwells than we had previously estimated. And so the supply chain team is doing an incredible job working with our supply partners to increase Blackwell.
Now, this is about product evolution and premium evolution in the Blackwell chip, Tom, isn't it? Because being able to charge $20,000 more for a Blackwell chip is about the evolution of demand and margin.
It absolutely is. And again, the executives at the head of NVIDIA say that margin story will improve into next year. You'll get back to that 75%. The Blackwell is and this is what they'll tout, a more efficient chip in terms of what you can produce, the training, the inference for these models, that yes, you're paying a premium for it, but it does that much more. And again, no one is doubting that the demand is there. The doubt comes to whether or not they can actually supply that demand, given the well-reported minor glitches they've had in terms of the engineering front. So again, that's why the first quarter, January quarter, as Morgan Stanley was saying, is going to be so important. Here's another potential question mark for those who have a skeptical lens on NVIDIA in terms of the concentration of clients they have, the hyperscalers, the Microsofts and the Amazons of the world. The concentration actually increased, so about 50% of their revenues now come from just a handful of major customers versus 45% in the prior quarter. That will, for some, being a little concerning. They want to see that going in the opposite direction because they want to see NVIDIA expanding, for example, to enterprise, to the sovereign space, maybe at a slightly more aggressive pace. But let's, again, reflect on the numbers here when it comes to the market advantage that NVIDIA has. Just in the data center alone, more revenues coming from that unit of the business than Intel and AMD combined.
It's pretty staggering, isn't it, Tom? And of course, we've yet to talk about the power supply for these clusters. Let's see what the Trump administration's power policy will be. That's going to be integral. Tom McKenzie with all the details on NVIDIA. Well, oil is higher this morning. Traders are weighing up the escalation of the Russia-Ukraine conflict. Ukraine says Russia fired intercontinental ballistic missiles as part of an overnight attack. Russia called Ukraine's use of British long-range missiles as, quote, a new escalation. Our guest this morning is Marvin Barth, and he writes this. Foreign adversaries that fear Mr. Trump's unpredictability have a short 76 days to change the facts on the ground. Joining us now is Marvin. Marvin, good morning to you. You say that we're entering a period of where Putin could take the gloves off. We can debate whether that's part of the escalation overnight, but you say markets are seriously underpricing the gravity of political risk in this vortex period.
Yeah, that's definitely been the case. We have seen implied vols rise a bit here, but we're still well in the third quartile of implied volatilities. And yet we are in a very dangerous period. This transition period is exactly the period in which the U.S. is adversaries, of which it has many, would like to change the facts on the ground to make sure that they are in the best negotiating position possible with the Trump administration.
Marvin, you have been so right on this, even before the latest escalation in Russia and Ukraine. Is this as bad as it gets, or do we need to brace ourselves for something worse before January, before the inauguration in this transition period?
Unfortunately, I do think we need to prepare ourselves for worse. You know, one of the predictions that I made, if you looked over the course of the last 2 years, was that Russia was very focused and driving very aggressively towards this key logistical hub in eastern Ukraine called Pokrovsk. They started to effectively stall that operation in the leading months into the election, I think because they did not want to swing the election to Donald Trump. I think the consensus is totally wrong on that. And as a result, we did see them pull back from that, but that immediately restarted as soon as the election was over. There is an aggressive push underway. They do look like they are positioning themselves for potentially an encirclement from the south, and that would be a disastrous development for Ukraine and I think for Europe, and puts European risk assets and the euro under significant risk.
Well, the euro this morning is down 0.25%. Bond markets are the immediate go-to here, Marvin. I'm interested in that the reaction function was much more limited when Ukraine launched into Russia. The reaction function from markets is much more aggressive when it's this counteroffensive from Russia. Bonds are bid, but I just wonder to what extent does that hold given the human steepener that is called Donald Trump. That's according to one of our guests a little bit earlier this week. Not my phrase.
Well, you know, it's interesting. I've actually had the opposite view on that. The steepening in the U.S. has been primarily due to the Fed's policy errors, not due to Donald Trump. In fact, you could see that steepening, particularly the 10s 30 steepening, started immediately after their 50 basis point cut, and it actually plateaued at the election. It didn't worsen from there. So this is that's much more a Federal Reserve story. And I do think, to your point about the reaction this morning with respect to the ICBM and Russia's change in its nuclear doctrine, that the bid for the long end is actually sincere here.
Marvin, the thing that this market has been hanging on to is, even though we've gotten a lot of picks for different cabinet positions from Trump that are unconventional, some would say, that the Treasury pick, markets are holding out hope that it is someone conventional, that it's someone that can sate markets and make sure things remain calm. You point out that what we've had so far is a common thread of a wrecking crew, of people that really come in and shake things up. Is the market too sanguine that regardless of who the Treasury pick is, by the way, a department that you once worked in, that we shouldn't be so sanguine on just kind of the staid, classic type of government officials that we're used to?
Yeah, Danny, that point about the wrecking crew, that is largely the domestic focused. So if you think about Justice Department, Health and Human Services, Commerce, the Defense or DNI, all of those have been focus of President Trump's ire towards those departments in the so-called deep state. And so he's putting in people who have a common thread of hatred towards those institutions they're being put in charge of, so he can count on them to go in and clean house. But notice that on the foreign policy side, he's actually chosen much more stable hands in terms of Marco Rubio. I'm blanking on the National Security Advisor right now, but these are actually solid people that project strength abroad. I think the Treasury pick is a much more difficult one because he's going to have to thread a needle here. Obviously, he has promised some sort of revolution in terms of payment systems with respect to crypto. He's also promised a reform of U.S. debt, and yet he has to make sure that he keeps foreign bondholders on board. So this is going to be a difficult needle to thread, somewhere between the wrecking crew and somebody who projects stability.
Well, you also take a side to Elon Musk and Vivek Ramaswamy. You call them unreasonable professionals. Part of the narrative is that they will take a wrecking ball, quite literally, to the number of people employed in government. That will open up opportunities, theoretically, for the private sector. This is the theory, Marvin, not yes. mine. But you call them unreasonable professionals. How much reality is there with this DOGE? Because it's a toothless committee by all account, but they are advisors with sway.
Okay, so I used the word unreasonable. I'm thinking of Eli Broad's title for his own biography. And Elon Musk and, frankly, Donald Trump are exactly that same type of character. They're totally unreasonable to deal with. They set ridiculous expectations, and then they go out and meet them. Nobody has done that more so than Elon Musk. And so, you know, for those of us who've worked inside the belly of the beast, not just at the Treasury Department, as Danny mentioned, but also at the Federal Reserve, we know that actually taking on the U.S. government and its bureaucracy is a mission impossible. And so you don't have a better candidate for that mission than Elon Musk. But as you highlight, the risks that he fails are incredibly high. I do think, to the point about it being toothless, I doubt it's as toothless as we think. I don't think someone like Elon Musk is going to sign up for this job for something that isn't going to allow him the opportunity to do something.
Marvin, this was so instructional. Thank you so much for joining us. By the way, it is Mike Waltz, I think, was the name that you were looking for the appointment of the National Security Advisor. Marvin Barth, well, thank you again for joining us of Thematic Markets. Let's get to some of the other top stories trending on the terminal this morning. Archegos Capital Management founder Bill Hwang was ordered to spend 18 years in prison for fraud and market manipulation, tied to the stunning 2021 collapse of his $36 billion family office. The judge rejected his request for no prison time, calling it, quote, utterly ridiculous.
Volkswagen is facing a growing threat of widespread walkouts as executives and unionists dig in over how to restructure Europe's biggest automaker. The talks will continue today, with warning strikes expected to start in December.
Shares of Adani tumbling. U.S. prosecutors charged the founder with participating in an alleged bribe plot. The announcement came just hours after units of the conglomerate had priced the bond offering that it ultimately scrapped. The group said that the allegations are baseless.
Coming up, Donald Trump's cabinet will need a Treasury Secretary delegate. How did the interviews go? We'll update you.
And we need more digestion time in equities. That's according to Katrina Dudley of Franklin Templeton. We're going to catch up with her later on this hour. More to come on your brief.
Front pages look a little bit like this from around the world. We're going to kick it off with the Financial Times. They start with Ukraine saying that Russia launched an intercontinental ballistic missile during an attack. Now, it appears that the first reported use of the missile since the beginning of the war. Russian officials have yet to comment on the alleged missile launch.
Next up, we have this on the Washington Post that Elon Musk's artificial intelligence startup, XAI, has told investors that it raised $5 billion. That means it's more than doubled its valuation from the spring. The primary product is Grok, a competitor to OpenAI.
And Bloomberg leads with, you got it, Bitcoin. We are almost at $100,000, fueled by optimism. The President-elect Trump's support for crypto, the crypto market as a whole, has gained $900 billion since Trump came to power. I mean, look, there's lots of angles to this story, aren't there? But the latest is that we may have a crypto czar appointed. It would be the first ever White House crypto role. And that's about power, access, and influence. And we see how valuation works with power, access, and influence so far.
Yeah, I mean, look, we've gotten bulled up on Bitcoin before, and it's disappointed. Same might go for Tesla. The thing is that these shifts in policy take years to materialize.
Yes.
So is this going to be a market that becomes impatient waiting for that materialization to happen?
Well, it's about what policy do you actually deliver. But to get out ahead of it, MicroStrategy, at the start of the week, they were going to do just over $1.5 billion of convertibles to gear up to buy more Bitcoin. That's up to $2.6 billion and counting.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger and Manus Cranny. Let's set your agenda.
So much anticipation for that mic drop moment. Nvidia underwhelms and the market dips. Conflict ratchets higher. Oil and gold rally after Ukraine report on Russia firing a ballistic missile. And the Treasury search continues. President-elect Trump holds meetings with contenders while mulling a new role for crypto. Danny, good morning.
Good morning. Well, when you have a PE ratio of something like 50 times, investors want something that looks miraculous, not just good. And we got very good for NVIDIA, but still shares down 3.2% pre-market. It's taking the rest of the futures session with it. S&P, NASDAQ, Russell all down this morning. NASDAQ obviously leading those declines, 0.4%. A bit into bonds. We did have a weak auction yesterday that led to a sell-off. Today, it is about risk of Russia-Ukraine. Again, Manus mentioned the headlines there. That's also driving money into crude this morning, up 1.4%. Now, when it comes to this overall market, Katrina Dudley of Franklin Templeton writes this, that there's a rotation under the surface. The tape has broadened out since the beginning of Q3. You can see that with the equal-weighted S&P 500 outperforming since the end of June. Katrina, I'm pleased to say, joins us now. Katrina, the broadening out has happened. And at the same time, we've had disappointment from NVIDIA. Does this signal a leadership change, all of these facts together?
I think we wanted to see some of that because we have been talking for the first half of this year, and even more about that, about how much pressure there was on that Magnificent Seven, and we were looking at them with their earnings growth expectations and their need to deliver. And the fact is the market has broadened, so it's more people and more companies are bearing, the kind of earnings growth lift that you need to sustain the market at these levels. So we're actually really happy about where this market is at.
Now, you say red sweep, look at the data, look at the history, outperformance will be delivered. I'd like to just counter that slightly and just say, going into 2025/2026, does that thesis endure for 2025 but becomes more challenged in 2026 when you actually know the tax, the tariffs, and the deportations? We have a window of where this rally can endure.
Okay, so first of all, thank you. We're talking about 2025, finally. I mean, we went through all of 2020 until just recently, and all we could talk about was the election and what was going to happen in the immediate term, and the market is starting to forecast into the long term. So, I just have to thank you for doing that. So that's the first thing. The second thing, let's look at 2025 and the setup going into that. We've got a Republican sweep. If you go back to 1932, it's about 23% of the time when you have such a bullish indicator in the markets where you have all of the houses aligned. So I think that we've got some really good setup from that in terms of passing policy that makes sense. On the tariffs, if you believe him at his word, it is slightly negative for the markets. The more bullish interpretation is this is the quintessential negotiator. And whenever you buy a house or whenever you start negotiating for anything, you always start with a low bid. So you want to look at these tariffs as kind of being an opening bid, and that he'll start to not backtrack, but we'll start to see softening, exemptions, things pulled out. So that's another aspect which is slightly bullish versus where expectations are for 2025. In terms of the deportation, yes, it is a concern. We've seen that the election has really spoken about some of the trends that are happening in the bottom income stratas, even actually moving into our middle class, and losing some more of our employees would be difficult in those workers. But let's not forget we have the Doge and we have some efficiency coming through government. So maybe we do have a little bit of transition and shift of workers.
But what is the starting point? Because I think about going into 2024, we were all talking about recessions. We were talking about equity markets not performing. And here we are with stellar returns from this equity market. Are we starting from a base that is more bullish with less room to run? Or have we kind of reset in the past week, let's say?
So when I came on the show in kind of late October, early November, we talked about how cautious and how bearish the market was. So I think what we've seen in this rally is really just the resolution of some of that bearishness, and you've seen the shift of the market, and it's just losing the bearishness. I'm not necessarily sure that becoming less bearish is becoming optimistic.
It's interesting. We've got political resolution, but we've got monetary policy procrastination. And pause is the new word.
Actually, no. I'm going to take the other side of this conversation here.
For all of my bids this morning, Katrina wants the offer. Go on.
But I think we have been in the position for some period of time, if I look at our fixed income team, that these cuts would be shorter and shallower. And I think the market has actually come to us. So I'm not necessarily sure you want to say that this is a Fed with a lack of direction. I think you want to listen to the fact that the Fed is paying attention to the data. We look at the action that they took in November, and I think they kind of gave us that second rate cut. But as I look into 2025, it's probably like a coin toss as to whether or not you get a significantly more rate cuts than where we're at. Maybe we get one adjustment, but the Fed is adjusting. And that's actually really good. That actually is a great narrative because they're actually adjusting rates to suit where the economy is at. And that's a position of strength.
And I mean, in the meantime, we have seen the bond market go back and forth. And for all the volatility in treasuries, credit has not had that. We're at spreads that are the tightest of the century. Is this just still post-pandemic animated suspension? Are we in a credit cycle? What is your read that you get from that?
So the credit spread tightening is so interesting because you're really not getting paid to take on risk. But if you look at the absolute return that you're getting, because rates have moved up, these are yields that you're getting that are significant and much higher than you've seen. I think people haven't focused on that credit spread. We've seen a number of our portfolio managers having a look, and they're basically saying we're not getting paid enough to take on the risk of high yield. So people are sitting in treasuries. Obviously, when people are sitting in treasuries and they're sitting in government debt, the next element of that conversation is going to go into our fiscal deficit and the projections that we've seen there.
Just very briefly, the Torsten Slog had a note out the other day. $2 trillion went in. When we started the hiking cycle, $2 trillion additional dollars went into money market funds. And I want to go to 2025 again. I mean, that's an additional alpha to risk if that comes out as we continue in the cutting cycle that you suggest?
Yes, so I think that there is a lot of money that is still sitting on the sidelines. Going back to our earlier comment, people were fairly cautious and nervous going into year end. And I don't think the election, a lot of people are still digesting those results and digesting what's going to happen in 2025. They didn't suddenly wake up the day after the election and go, all in, let me put all my money market. And if you're sitting in money market, you're naturally just a conservative investor. So I think that you're going to see that money bleed into the market. And so it's going to perform kind of a base level support. You combine that with share buybacks coming out of corporates. And I think the outlook for 2025 is good and strong.
Katrina, we'll have you back very soon. Let's see how the rest of the year pans out. That is Katrina Dudley, Senior Investment Strategist at Franklin Templeton. Coming up on the show, NVIDIA, we'll dig a little bit deeper into the results. We've got Frank Lee at HSBC. He's with us next on Bloomberg. It's your Bloomberg Brief. I'm Manus Rennie alongside Danny Berger here in New York. NVIDIA extending its post-earnings drop. This is the chip maker. The outlook fails to keep investors satisfied despite a strong quarter. Frank Lee is the global head of tech and hardware for semiconductors over at HSBC. He's dropped his price target. You've shaved it by $5 from 200 to 195. You still have a buy rating on this. I mean, Frank, can you just give us some context here? Because there was a lot of hyperbole around the guidance, that it just didn't guide to $40 billion. How underwhelmed are you by the guidance? Let's start there.
Yeah, I think, going into this quarter, there was a lot of expectations that got ratcheted up. I think it was a solid set of results, but just quite not bullish enough for a significant beat and raise, as I think the market has been hoping to see. So in some ways, it's very similar to what we saw last quarter. But I think, there are some silver linings to take away from this result as well. For one thing, the Blackwell ramp is going, I think, fairly well. And in fact, the company has talked about, their Blackwell revenues for the fourth quarter could exceed what they were previously looking for. And there was a lot of noise, I think, the last couple of months about supply chain bottlenecks and delays. So that's a pretty positive takeaway from this.
I mean, Frank, you look at the stock market reaction, which, okay, isn't massive for NVIDIA the way it swings, but it's enough to drive yourself crazy to say this market was disappointed by 73% margins instead of 75. These are still really chunky numbers. I just wonder, Frank, is this kind of the new norm for NVIDIA, that they're going to put up huge numbers, but they're not going to do the massive beat and raise anymore, that this is the new normal?
Yes, I think that's a really good point. I think, the last two quarters, we haven't seen the significant beat and raise. That being said, though, I think the setup for next year is still very positive, and we still think there's a possibility that we will see a quite significant upside to where the market is, or most of the analysts are looking for next year. If you see what next year, the capex trend for hyperscalers continue to be quite positive, don't show any signs of slowdown. And also, I think the other key takeaway is the enterprise market is now a much bigger part of the end market. The hyperscalers now are probably a little more than 50% of their revenues, of data center revenues. But a year ago, this number was closer to 70, 80%. So it shows you it's a much more diversified customer base. And I think the last thing is just the supply chain that we see in Asia continue to see upward revisions. So that's also a very positive sign going into next year.
Part of the discussion, Frank, which is about whether you're at peak data center, but it is about where do you spread out and where does the evolution come to? Where do you see the next leg of growth beyond data center?
I think the data center story still has a long way to go. So I don't necessarily believe that, you need to look for something immediate beyond data centers. I think if you think about the first year of the AI story, it was really about just training the AI models. And now it's become a move to inference where NVIDIA continues to dominate. So I think, just that alone, I think, can carry them for quite some time. So I don't necessarily think we need to look outside of the data center space, because I think the investment cycle is still in the early stages.
Frank, Jensen Huang on the call was asked about the political landscape. I just want to read you what he said. Whatever the new administration decides, we will, of course, support the administration. What is the regulatory risk for NVIDIA at this point with a Trump administration coming in next year?
I think it is definitely, I think, a difficult question to answer to answer right now. But I think, as he said on the call, they will respond to whatever the administration's moves are going to be. So if that means higher costs because of the potential tariffs on the semiconductor manufacturing out of Taiwan, then that's what NVIDIA would do. They will have to basically find a way to pass on these costs to the customers or absorb some of it. So I think they will continue to basically navigate around whatever policy changes they are. But I think the fundamental story is unchanged, which is the demand is still strong. And I think as long as that remains the case, I think the story it doesn't really deviate from what has been for the last 18 months.
Frank, to what extent do you consider the delivery of power? Power is critically important for the building of the clusters, the American policy of keep building in America. How important is the Trump policy on power and the development of power for the escalation and the development of the data center and the clusters?
I think the power is definitely an issue that supply chain has encountered as well. That has, in terms of finding better solutions, is something NVIDIA is constantly trying to do with its roadmap. And I think they have continued to find more efficient ways. It will be, some sort of a stress on the overall power grid system. But again, I think the chips that are coming in the future are going to become, more efficient as well going forward. And I think so far we haven't really seen this although it's an issue that's been well talked about and flagged, it hasn't really been an issue that's held back the overall deployment of the data centers.
Frank, just quickly, Jensen Huang also joked on the call, almost every company in the world seems to be involved in our supply chains. Less than a minute here, but where among the supply chain do you like? If anything's going to get bid up with NVIDIA, where do you want to look to?
I think, you want to see where the biggest content growth opportunities are, right? And the ones that can ride along with NVIDIA. Obviously, there's a very deep supply chain in Asia, particularly in Taiwan with the semiconductor and then all the hardware assemblers. You also see some of that in the US in terms of on the optical side, there'll be some content growth as well. So I think those are going to, along with memory is going to be another area where you're going to see significant content growth. So those are going to be the areas I think benefit the most.
Frank, we really appreciate that. Frank Lee there of HSBC after NVIDIA's earnings. Okay, let's get you an update now on tensions between Ukraine and Russia. Oil and gold are gaining this morning. Risk is selling off. Ukraine says that Russia fired an intercontinental ballistic missile at a central city in Ukraine. It'd be the first use of an ICBM in combat since its development in the Cold War. For more, let's bring in Bloomberg's Kevin Whitelaw, who joins us now. Kevin, this is something that actually moved oil markets. The news yesterday on Ukraine launching a U.S. long-range missile didn't. So is this escalation? What should we fear here?
Well, I mean, I think we first need to say it's not fully confirmed yet. This is what Ukraine has said has happened. Russia hasn't confirmed it. And at this point, we don't have Western, either U.S. or European officials confirming that this was indeed a use of this missile. But if it's confirmed, it shows that both sides are starting to up their tactics in the sort of run up to when Donald Trump is going to move into the White House. And I think that you're seeing an understanding that if there is going to be any kind of a conversation down the line about a ceasefire or some kind of a broader settlement, each side wants to have the best possible negotiating position. They want to be in the strongest possible place. And that means then trying to take whatever bits and pieces of advantage it can. For Ukraine, that's been trying to strike some of these ammunition sites and some of the other operating bases that Russia is using inside its own territory to stage attacks into Ukraine. And obviously, Russia is trying to show that it has additional ways to respond and additional ways to inflict pain on Kyiv. So it's a dangerous time, and obviously it's a cycle where you're seeing both sides sort of step things up in ways that are risky.
Kevin, we have a vortex that we are in between one administration ending the Biden and the new Trump administration arriving. To what extent now will the baton for de-escalation, or at least keeping the status quo where we are, will it fall to the Europeans? We know Scholz has been on the phone. He was derided for that. Macron does not have the power. Meloni has the power in Europe. What happens to the voices of reason here?
Well, I mean, I think that the U.S. would say that it's simply trying to help put Ukraine in the best possible position. And if there is going to be some kind of a negotiation and it's trying to deliver whatever weaponry and others it can before there's a risk that U.S. support to Ukraine gets cut off. I think, for Europe, it has also been in that position of trying to make sure that Ukraine does get that support. So broadly, Europe has been supporting these efforts, and there's been conversations within the EU about the need to allow the use of Western weaponry deeper into Russia. There's not full agreement on that, of course, but I do think that the broad construct is understood that there is a nervousness surrounding what Trump is going to do and how that's going to play out if he does indeed try to open some kind of a negotiation with Vladimir Putin.
Okay, Kevin, thank you very much. Kevin Whitelaw there. Markets are moving on the back of this story. Oil, gold, bid up this morning. And moving over the past 45 minutes. Let's shift our attention back to Washington. President-elect Donald Trump still doesn't have a Treasury Secretary, but he has spoken with some of the contenders for more on the chase to win the position. Let's bring Bloomberg's Meghan Crane around the desk with us this morning. Meghan, we know some of these interviews took place yesterday. Hegarty spent the day with him at SpaceX on Monday, but yesterday was all about Wash and Rowan. Do we think we will get a decision before the end of the week? How close is it?
Well, it seems close, right? He's having second, third interviews with prime candidates, but it looks like Trump is really looking for the perfect candidate. And the problem is contradictory demands, conflicting interests in what he wants, which is someone, who's respected by Wall Street to buoy markets and, keep sort of the system going. But he's also promised change, and he wants to satisfy his populist base that's interested in tariffs and crypto and sort of different, sort of sweeping changes in how it works. And those two things it's going to be hard to find the perfect messenger for that.
And it does just stand in contrast to the flurry of other appointments that we've had. And on that, Trump has said that he's going to skip FBI vetting, something that has 60 years of precedent. What do we understand of the Senate's willingness not just to let him do that, but do other things that Trump wants to, for example, like recess nominees? How easy of a time is Trump going to have getting these appointments through the Senate?
Right. So I guess my theme this morning is sort of contradictory demands because that is another great example. Senators are pretty loath to give up their power. They have, a constitutional responsibility to advise and consent. That tradition stands with, interviews and hearings, and those are all based on FBI background checks. Trump hasn't said he's not going to do them, but he also hasn't started them. So it's sort of one of those things that's a little bit unclear. He doesn't trust the FBI, doesn't trust the Justice Department. That's been a big part of what he's talked about in the past. But also, if you have private companies and private individuals doing the vetting, like who are they? Who vetted them, right? So it becomes less credible for the senators. So they don't necessarily want to give up their power, but also we don't have a long list of examples of the Republicans in the Senate really standing up to Trump. So, how that works out is unclear at this point.
We have this op-ed from Vivek Ramaswamy and from Elon Musk in the Wall Street Journal. They're talking about a number of different things, but the real criticism is, of course, around unelected officials making decisions, and they also want to drive to bring people back 5 days a week. This is a privilege that they say needs to be done away with.
Yeah, so interestingly, that's one of the things that they can really sort of implement pretty quickly, right? They can, the president can say that people need to come back to the office 5 days. However, a lot of those organizations are unionized workforces and maybe have different work from home arrangements in their contracts. And I'm not necessarily sure that that's the best way to cut a lot of employees because it's a pretty blunt instrument, right? Like you're not necessarily cutting the people you want. The ones who refuse to come back. So it's a little unclear how effective that would be, but it is something that they can do. It's something that they can certainly, and it would be really popular among the leadership of Washington, D.C., who want people in the office.
Well, again, it goes back to untangling the beast that is bureaucracy to sort out these things. Meghan, we love having you in New York. Thanks for coming in again. That is Bloomberg's Meghan Crane. We will set you up for your day ahead next. Let's get you set up for your trading day on this Thursday. We're going to get jobless claims 8:30 a.m. Eastern. Then we'll get existing home sales. That comes at 10 a.m. We also have more earnings. Deere before the bell, Ross Stores and Gap. Those come after the market close. We're going to get some more Fed speak too. Goolsby, Hammock, Barr. All of that kicks off at 8:45 a.m. Manus, what you got for movers?
Guess what? Kick it off with NVIDIA, extending their loss down over 3% now after the quarterly results. They just didn't hit those lofty expectations on the revenue side. We just had Frank Lee, he cut his price target to $195. And Snowflake shares jump, strong product sales, and a growth outlook for them up 21%. A MicroStrategy on fire. The crypto stocks are higher this morning. You've got Bitcoin closing in on that $100,000 level. A MicroStrategy gearing up, we understand, to maybe buy a little bit more Bitcoin. That's it from Bloomberg Brief. Surveillance is up next. Good morning from New York.